Hey there, this is Brian Gormley with CapitalShortSale.com, and we're in Greater DC. We're filming from a very unique place this week. It's subject matter relevant to what we're going to discuss. So hopefully you can tell the building right behind me. We can't really do a 360 like we normally do because that would give away too much. But this is a place where a lot of stuff happened over the last, say, 10 years, and many people point to this and another couple locations around town that were really the source or one of the major contributing factors of the housing mess that we're currently in. So send your guesses, support at Cornerstone Properties, homeinfo.com. We're giving away a free bottle of champagne this week, and probably going to do the same thing next week as well. Because guess why? We're running a contest. It's not too late to enter. Giving away a free iPad. Just go to CapitalShortSale.com. It's connection with our new website launch. All kinds of great information there. Register on the site for your free iPad, and refer a bunch of your friends and family and work colleagues and so on. Everyone you refer over there through any kind of social media or email effort, you get credit for and get another ticket in the raffle. And we're going to announce that next week, same time, same place. This venue, who's going to win the free iPad. So take a stab at that. Visit CapitalShortSale.com. So what's been in the news, and it sort of would be remiss to not touch on this, is the S&P downgrade of the U.S. Debt rating. And what's kind of crazy about it is the reaction. I mean, who knows what's going to happen? One would think in the bond markets for treasuries that if you're rated less, your debt securities are going to trade at a discount, and as a result, obviously, investors are going to demand a higher premium, obviously in the form of increased interest rates. And you really didn't see that in the bond market. So I guess a AAA rating to a AA plus, there's not much difference there, but a lot of factors could have gone on there. Certainly people, all the talking heads trying to impose stability in the market, all the folks at Treasury and the White House calling around all the different international markets and saying, hey, no, don't worry about it. S&P, they don't know what they're talking about. We're still going to make good on our debt obligations. So not a huge surprise that we didn't see a big tick up in interest rates. Of course, that would be very, very detrimental. Really, there's no winners in that. Other than perhaps the people who hold those debt securities and have a little bit of premium, sort of an inverse risk premium, if you will. Meaning that there's no real increased risk of default, but there's a increased demand or price paid for the securities, and so they can get a little bit more for their money. But the reality is, who owns those debt securities? A lot of it is actually U.S. taxpayers, so we're paying it to ourselves if there was a little bit of a premium. Not, like I say, not a really big surprise that there wasn't a tick up there. It really would be bad for the housing market if there was, to the extent that mortgage rates are tied to a 10-year Treasury and LIBOR for that matter, and the cost of borrowing for these lenders goes up, then guess what happens to housing prices? Because they're just going to pass that cost through to consumers, and housing prices, of course, necessarily will fall as a result, at least on a macro level. So that's not good. Stock market on Monday did have some volatility. It went down. That really, I read some articles about that, thinking that this was such a big surprise. I really don't think so. The stock market is a there's two components to the stock market. One is an underlying asset valuation, whereby you're looking at real worth of companies. The other is sort of this arbitrage hedging opportunity where there's a lot of market sensitivity. People go in, go out, try to make a quick buck, and a lot of that is driven by perception and just by volatility and confidence. And so, to the extent that there's uncertainty in the market, that's going to increase fears, anxieties. People are going to run to safe havens. They're going to pull their money from this to try to shelter their losses. put it in that to something that's considered more stable. Of course, typically the U.S. Treasury bond was considered the most stable investment until you'd have a flight to quality to the U.S. Treasury bonds. So anyway, not a huge surprise that there's a temporary dip, and maybe it's going to be just a little blip in the stock market. What's more interesting actually is dealing with securities from folks like the company that's behind me, to the extent that the U.S. Treasuries are now interrelated to GSEs and and other securities in the market that are not necessarily U.S. Treasuries per se. That could have secondary and tertiary implications for the market as a whole, to the extent that there's secondary market volatility or illiquidity, meaning that secondary markets have a harder time trading mortgage-related paper, whatever that may be, if it's an underlying mortgage MBS type product or it's actually the mortgages themselves. That's a problem. That's a big problem for housing markets generally, as well as capital markets more generally as well. And that's getting back to the woes we had in 2007 and 2008, and the reason for the bailouts then, because of the absence of liquidity. So definitely something to keep an eye on. Obviously, no one has a crystal ball, and I would probably agree that this is going to be more of a temporary thing. S&P, his reputation is really, it's too bad. It's really been hammered, and of course they're going to be the scapegoat here for political woes that we have, which are obviously real problems as well. So to the extent that we can fix our political process, which unlikely, or at least it spurs us on to better governance. Amen. So. Okay, happy guessing. Email your guess to support at cornerstonepropertieshomeinfo.com. Win a free bottle of champagne this week. And don't forget, you still have time. Register, capitalshortsale.com. Refer your friends and colleagues and so on to the site. You get credit for everyone who comes. You just follow the prompts and the instructions. It's really easy. And win a free iPad next week. Until then, happy trails.